Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Merry Christmas, everyone. We are headed into the final trading week of 2025. And before we get into the weekly market recap, it's worth taking a moment to reflect on what's really worked this year. 2025 was clearly defined by the AI trade. This is a continuation trade from last year. Those who benefited the most were traders and investors who stayed aligned with the data, not the noise. From semiconductors to infrastructure and AI enablers, following the trend and the flow mattered. It was also a strong coming out year for the data vesting community. Investors and traders who focus on structured, data-driven decision making using either the A-line entries or the monthly positional trades, leveraging risk management probability statistics and maths rather than predictions. With that context, let's get into the final weekly recap of 2025 and see how the markets are positioning as we close the year and prepare for 2026. A quick housekeeping before we get into that. The purpose of this table here is for me to give an analysis of how these major markets are trending going into the coming week, looking at the short-term bias leveraging the daily time frame as well as the mid-term bias leveraging the weekly time frame. I identify each of these assets as either bullish or bearish on each of the time frames I mentioned earlier, which is the daily time frame and weekly time frame, using the interaction of the close price and the EMA as well as the DMI, that means the plus DMI and the minus DMI, as well as the ADX. Specifically, I identify a bullish trend when the close price is greater than the 20 exponential moving average and the plus DMI is greater or above the minus DMI, and when the ADX value is greater or equal to 20. When these three conditions are met, I identify that chart to be bullish, right? That means the trend on the chart to be bullish. So not just bullish like because I feel it's going to go up. No, I'm looking for trend because the trend is your friend. I also identify a bearish trend when the close price is less than the 20 exponential moving average and the minus DMI is above the plus DMI and the ADX is greater or equal to 20. Once these three conditions are met, then I tag that chart to be displaying a bearish trend. Whenever the chart is not showing a bullish nor bearish trend, I tag it as neutral, right? Other synonyms or abbreviations that I think you need to know is the WTD, which stands for week to date, YTD, which stands for year to date, and PY, which stands for previous years. Let's begin by examining the US large cap stocks tracked by the ETF VTWO, which delivered plus 0.93% this past week. Year to date, VTWO has delivered 17.82%. compared to The previous area overall 24.98%. We still have some room to go. I'm not sure we might be able to outperform the last year because the differential is almost like 6%. But we're going to see. I mean, the market has never returned that much in 1 week, but let's see what this last week would bring forth. In the short term, a neutral trend can be identified on the daily time frame, while in the mid-term, a neutral trend can also be established from the weekly time frame. The Nasdaq, which I tracked by the ETF QQQ, gave positive 0.41% this past week, bringing its year-to-date return to 22.04%, 3% shy of last year's overall 25.58%. We'll see what is going to happen this week, if we can match it or outperform it. In the short term, a neutral trend can be identified analyzing the daily time frame. Also, in the mid-term, a neutral US small cap stocks quantified by the performance of the ETF VTWO this past week printed negative 0.33%. Year to date, VTWO has delivered 13.76%, which is above last year's 11.55%. In the short term, a neutral trend can be identified on the daily time frame, and in the mid-term, a bullish trend can be observed from the weekly time frame. Canadian equities evaluated by the ETF VCN delivered positive 0.77 this past week. Year to date, VCN has delivered 29.52%, which is 7% above last year's overall 22.16%. In the short term, a strong bullish trend can be identified on the daily chart, and in the mid-term, a strong bullish trend can also be observed from the weekly chart. Switching to the Nigerian equities, tracked by the NGX ASI index, this past week returned positive 0.98%. Year to date, the ASI has delivered 49.17%, which is over 12% higher than last year's overall 37.65%. Short term, the daily chart points to a strong bullish trend, and in the mid-term, the weekly chart is also pointing to a strong bullish trend. Oil commodity, tracked by the ETF USO, inked negative 1.55% this last week. Year to date, oil prices have delivered negative 9.36% compared to last year's overall 13.35%. Might oil be the trade of next year to be like a catch-up trade for the underperformers in 2025? We're going to use data to track that and keep you posted. In the short term, a neutral trend can be observed studying the daily chart, while in the mid-term, the weekly chart is pointing to a neutral trend. Bitcoin, proxied by the ETF GBTC, posted negative 2.73% this week. Year to date, Bitcoin has delivered negative 7.59%, which significantly underperforms last year's 113.81%. Let's also keep an eye for Bitcoin in 2026 to see signs of reversal. In the short term, the daily time frame exhibits a bearish trend. Additionally, in the mid-term, the weekly chart points to a bearish trend. World equities, tracked by the ETF VT, gave positive 0.90% this last week. Year to date, VT has delivered 21.30% compared to last year's overall 16.49%. In the short term, a neutral trend can be identified studying the daily chart. Furthermore, in the mid-term, a neutral trend can be identified analyzing the weekly chart. Finally, gold commodity, tracked by the ticker GLD, which is an ETF, also delivered 2.40% this past week. Year to date, GDLD has delivered a gigantic 72.11% compared to last year's overall 26.66%. This is very impressive. In the short term, a strong bullish trend can be identified analyzing the daily time frame. In addition, in the mid-term, a strong bullish trend can be observed studying the weekly chart. This brings me to the end of this week's market recap of the market. Join me in the next section where we look into the NGX market internals to infer which sectors are lagging or leading and the overall health of the market when we peel or when we look under the hood. In this section, we're going to have a data-driven look at the breadth and strength of the Nigerian stock market, which we track by the index NGX ASI, and we tag this section as the NGX market internals. Just a reminder, this last week the NGX ASI inked 0.98% gain, and year to date we are up 49%, which is 12% currently better than last year's overall 37%, which is quite impressive. Now, beyond that remarkable performance, there is the NGX market internals, where we look at what are the drivers for this performance. Housekeeping once again. The green ball tags strong broad participation of the stocks within the NGX ASI. A little bit of education 101. The NGX ASI comprises 143 stocks currently. When stocks are listed or delisted, this number can fluctuate, but as at this week specifically, we have 143 stocks that are listed in the NGX ASI. These stocks can be further categorized into different sectors, ranging from consumer goods to insurance to banking to industrials and oil and gas. Right now, the market internal is our way of looking at the various sectors to see how they are supporting the NGX ASI. A rising tide floats all boats. Now let's get into it. The first measure here, or the overall assessment of the NGX ASI, is advancing and healthy, and I scored it as a yellow ball, meaning neutral, fair participation by the sectors that comprise the basket. Now, the market internal comprises of me measuring the market's breadth and strength using the moving averages as well as Weinstein classification. The first KPI that I track is the percentage of stocks that are trading above their respective 50-day moving average. Remember last week I defined the 50-day moving average as the average of the past 50-day close price, right? So it's just taking the last 50 days from today and finding the average. What a technical analyst would also do with that data is to see how the close price is interacting with the 50-day moving average. If the close price is above it, that is positive. Also, when the slope of the 50-day moving average is positive and upwards, then you know the trend is in favor of the buyers, right? So if you're a trader, you want to look for positions there, because the 50-day moving average to me serves as a good basis for the long-term trade from the daily time frame, right? So if the trend is up, then you know buyers are in control. You want to, they say the trend is your friend, right? If the slope is negative downwards, then I wouldn't want to buy. I won't want to participate as a buyer in such type of stock. So you can see that week over week we actually saw 4 percentage point increase. So we saw the percentage of stocks trading above their 50-day moving average to go from 45% to 49% this last week. Also, we looked at the 200-day moving average. So the 200-day moving average similar to 50-day, right? Here we are using the 200 days. So if you look at it in terms of quantifying what these numbers mean, 200 days is roughly the number of days in a year. 50 days is the number of days in, let's say, 3 months. So that's how you can picture them qualitatively, right? So week over week it remained flat, 73%, right? And if you see 73% of stocks, that's an A grade, right? That's good, right? So that's what we can see from the moving averages. The next measure or classification or categorization I use is the Weinstein stage analysis. Again, you can go to ChatGPT, you can buy the book by Sam Weinstein, where he identifies that every stock has 4 phases, right? You have stage 1, stage 2, stage 3, stage 4. He advises that you go long or you buy a stock, whether as an investor or a trader, when a stock is in stage 2 or late stage 1, right? You want to short or sell when a stock is in declining phase. That's stage 4, right? So when I look at the percentage of stocks that are advancing in the NGX, this week we ended at 55%. The former week it was 57%. So this is like a 2 percentage points, right? To me, this is not statistically significant for me to be worried. So we can also say this is like flat. But if we want to work with numbers, right, this is a minus 2 percentage points change, which is decrease, which is to me is not significant. Also, when I look at the percentage of stocks in a strong stage 2 uptrend, right? So stage 2 are stocks that are advancing, right? But now stocks might be advancing, but they may be advancing sluggishly. But now you also want to look for stocks that are in stage 2 but are advancing, that are showing strong impetus, right? When they're advancing. So this is what I tag here by strong stage 2 uptrend, where we are seeing that a 2 percentage point change again. The former week we had 30%, and this week it was ended, it was 28%. Again, we can say this is noise and this is not statistically significant, right? But the idea is, as a trader, I will want to look for low risk, high probability trade setup within stocks that are in strong stage 2 uptrend. And all this, I arrive at all this list using TradingView Screener, right? I have a criteria of what I'm looking for, and once I've put that all I need to do is refresh my list every week, and that's how I'm able to create this list week over week. Now, when we look at the sectors again, remember here let's focus on strong advancing sectors. So this is the strong stage 2 uptrend stocks, right? We can see the NGX ASI is in a strong uptrend, which is great for us. That's why we've been seeing a bullish reversal this December, towards the latter part of December. The NGX 30, which is also 30 of the most market capitalized stocks in the NGX ASI. Then when we look at the sectors that are also pushing the NGX ASI as well as the NGX 30 up, remember these are just indexes. The real stocks are what are doing the heavy lifting, and those stocks belong to different sectors, right? And so the sectors that are actually doing the heavy lifting, right? Consumer goods, the stocks that are there, right? They are the ones doing the heavy lifting. Some of them, they can't be all of them, right? Your job or my job as a technical analyst is to know the ones within the sectors that are doing the heavy lifting. Last week we only had the consumer goods sector. This week now we can see that the industrial sector has joined, and so it's now we have 2 sectors that are pushing the market up, which is better than only having one sector, right? Now we have sectors that are either advancing or declining, right? So any other stage outside stage 2 uptrend, right? So stage 2 is also here, right? This first one here at the strong stage 2 stocks. Here is just any other stage 2, stage 1, stage 3, and stage 4, right? I just love them together. I didn't want to be bringing them down, and be making so many classifications. So every other sector here, oil and gas, banking, and insurance, they are either declining or just advancing sluggishly. As an investor, long-term investor, you can find opportunities here. Now, someone asked me the other time, so now if consumer goods and industrial are strongly advancing, how do you then look for stocks that you trade? Well, that's a very good question. How I go about it is, once I've arrived at the sectors that are strong, I want to then look for the strong stocks within that sector. I can do that in many ways. One of the easiest ways that I can identify them is using the Mansfield Relative Strength Indicator, right? And so what that does is that it shows me how strong that stock is relative to an index. And the index I usually compare my stocks to at the NGX ASI. So with the Mansfield relative strength indicator, I can see which stocks are actually stronger than the market. Let's leave it there and let's move to the American market to see which opportunities we may benefit from during the last trading week of the month, referred to as the center rally. In the US market, in the short term, we can trade the market by looking for which sectors are showing strong short-term momentum, and that's how the data investing community goes about it. We'll look for which sectors within the S&P 500. So the S&P 500 has 11 sectors, right, ranging from industrials, financials, consumer staples, consumer discretionary, industrials, healthcare, technology, communications. So there are 11 sectors, right? The first step is to look for which sectors are showing strong short-term momentum. Once we identify the sectors, we can go and trade that sector via an ETF, right? All those sectors I mentioned have an ETF for them. So your job is also to know which sectors, which ETFs belong to which sectors. So going into this last trading week, the system is flagging only the technology sector to be showing strong short-term momentum. Just some housekeeping again. This figure here is showing the performance of technology sector 3 months to date as well as month to date. The darker shade of green is the 3 months to date, which is 4.51%, and the lighter shade of green is the month to date performance, which is 3.39%. So you can either trade the sector because it's hot in the short term. Again, when I mean trade, does not mean you just go and buy it first thing on Monday, right? As a technical analyst or a technical trader, you have to have some rules for your entry. So the idea is just to know which ETF that's going to be on my radar going into this week, which is technology. Once my entry rules are met, then I'll take a position and trade it in the short term. The strong sectors. We have identified technology to be the strong sector. Now, can we identify the strongest stocks or the hot stocks in this hot sector? Yes, we can. My system here is showing these stocks in the technology sector to be hot stocks, right? How or why are they hot? Look at what they've done so far this month. SNDK 18%, Micron 22%, WDC 13.32%, LRCX 15%, TER 11%, and so on and so forth, right? JBL 13%, KLAC 9.84%. These are potential stocks that I will put on my radar going into this week. Again, as usual, I'm not going to go buy any of all of them or go and buy the top one. No. As a technical trader, you need to have entry rules. In the data investing community, we refer to our entry rule as A line, right? A line entry. So that is our low risk, high probability trade setup. Now, my system is able to identify all these hot stocks, hot sector, using a custom talkstockswithme score metric, which you're seeing here in the second column. So you can see SNDK has a score of 5.11, MU has a score of 3.66, right? So these are arranged in descending order, right? So this is telling you this is very hot, this is next to it in the technology sector, right? So in some of my previous video, I've explained how I arrive at my scoring metrics. So this is how we use data at the data investing community to look for opportunities and then take entries using the custom patented A-line long entry strategy. Now let's wrap up this week's video. As we close out the final week of 2025, the message from the data is pretty clear. This is a market that's calling for selectivity, not aggression. Most major risk assets like the US large caps, the Nasdaq, oil, and global equities are sitting in neutral regimes. That tells us to stay patient, avoid forcing trades where momentum hasn't fully committed. At the same time, leadership is still visible. Canadian equities and the Nigerian markets remain bullish across both time frames. Gold continues to show strength, and the US small caps are showing improving midterm momentum. On the flip side, Bitcoin remains bearish across both short and midterm trends, which reinforces the importance of respecting regime shifts rather than fighting them. Going into 2026, this is exactly where a data vesting approach matters most. Stay aligned with strength, stay disciplined in neutral markets, and let the data, not the emotions, guide positioning. Thanks for tuning in. If you found this helpful, please drop a like in this video. Let's raise the likes for these videos. It will greatly help the channel. Hit the subscribe button if you haven't. If you found benefit in listening to this weekly digest, I will be happy if you hit the subscribe button and help continue the channel grow. And also, kindly please share your market view in the comments. I like to read from you, or like to see how you are looking at the markets and what your plans are. Let's learn from each other. Please put in the comment sections. I'll see you all again in the new year. Until then, stay safe, stay blessed, and trade wisely.